Hey everyone, welcome back to Corporate Decoder. Today, CDIOW Diagnostics Holdings Incorporated, ticker CDIOW, just filed their latest 10Q report, and I am seeing one red flag related to their stock listing that matters a lot. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing a potential delisting from the Nasdaq stock market, which could seriously impact their investors. Alright, let's dive into this report from CDIOW Diagnostics Holdings Incorporated. This is their quarterly report for the period ending the 30th of June 2026. CDIOW Diagnostics is focused on developing AI-driven DNA biomarker testing for cardiovascular diseases. Think of it as a company trying to predict and prevent heart issues before they become serious. Looking at their balance sheet as of the 30th of June 2026, we see total assets of about $7.9 million. Their cash position is around $5.6 million, which is a good chunk of their assets. Now let's talk about how much money they're actually making or losing. For the 3 months ending the 30th of June 2026, their revenue was only $5,360. Yes, you heard that right, $5,360. For the 6-month period ending the 30th of June 2026, revenue was $8,040. This is a very small amount of revenue for a publicly traded company. As a result, they are consistently losing money. For the 3 months ending the 30th of June 2026, they had an operating loss of nearly $1.5 million. And for the 6-month period, the loss was over $3.2 million. This means they are spending a lot more money than they are bringing in. This translates directly into a net loss for the 3 months ending the 30th of June 2026. The net loss was $1.5 million. For the 6-month period, the net loss was over $3.2 million. What is interesting is that their number of outstanding shares has increased significantly, from about 1.7 million shares in June 2025 to over 2.9 million shares in June 2026. This dilution can make it harder for existing shareholders to see their investment grow. Because of these losses and increasing shares, the net loss per common share is also significant. For the 3 months ending the 30th of June 2026, it was negative $0.51. For the 6-month period, it was negative $1.13. Now let's look at some of the details behind these numbers. The company reports they have one operating segment, product testing. They believe this is the most important segment for financial reporting. Their main products are EpiGen HD and precision tests for cardiovascular disease. They mentioned that revenue decreased in the first quarter of 2026 due to the conclusion of a testing initiative, but they are onboarding more providers and expect Q2 revenue to pick up. A big chunk of their expenses are in general and administrative costs. For the 3 months ending the 30th of June 2026, these were over $1.1 million. For the 6-month period, they were over $2.6 million. They expect these costs to remain relatively flat, but are anticipating increases in payroll and facility costs. Now let's get to that big red flag I mentioned earlier. The company is talking about new Nasdaq rules. Starting the 22nd of July 2026, Nasdaq wants listed companies to maintain at least $5 million in market value of their listed securities. The problem is CDIOW Diagnostics Holdings Incorporated's current market value of listed securities is very close to this threshold. As of the 6th of August 2026, their stock closed at $1.66. With about 2.9 million shares outstanding, their total market value was just under $4.9 million. If this new rule goes into effect and they can't keep their market value above $5 million for 30 straight days, they could be immediately delisted from Nasdaq. This means their stock would likely move to the OTC market. Trading on the OTC market is much less liquid and can be very risky for investors. Imagine if you own shares and suddenly it becomes very hard to sell them. This is a serious concern. Historically, companies that have gone through reverse splits and faced delisting warnings have seen their stock price drop significantly further. For example, when Kodak did a 1-for-20 reverse split back in 2021, holders saw about a 40% additional drop in value over the next 90 days. A $1,000 investment back then could have become only about $600. For CDIOW Diagnostics Inc., if they are delisted, the risk of further price declines and difficulty selling shares is very real. Looking at their cash situation, CDIOW has been actively selling shares through an at-the-market offering. Since January 2024, they have sold over 2.2 million shares on a split-adjusted basis, bringing in over $18.7 million. However, they are still burning through cash. For the 6 months ending the 30th of June 2026, they used nearly $2.9 million in operating activities. While they brought in cash from financing activities, primarily from selling stock, they are still not generating enough from their actual business operations to cover their expenses. Their overall net loss for the 6 months ending the 30th of June 2026 was over $3.2 million. They also have warrants outstanding. These are essentially options for investors to buy stock at a certain price. The problem is their exercise prices are much higher than the current stock price. For example, the lowest exercise price is $53.40 on a split adjusted basis. The current stock price is only $1.66. This means it is very unlikely these warrants will ever be exercised and the company is not counting on any cash from them. This is a common sign of a company in financial distress. The company also disclosed a material weakness in their internal controls over financial reporting. Basically, they said they have inadequate segregation of duties due to limited staff. This means there is a higher risk of errors or even fraud because not enough people are checking each other's work. While they are working on fixing this, it highlights ongoing operational challenges. The biggest risk they point out is their continued listing on Nasdaq. They are very aware of the new market value rules and their current position is precarious. So what is my take on all this? CDIOW Diagnostics is in a tough spot. They have innovative technology, but their revenue is almost non-existent, and they are losing money hand over fist. The real story here is the Nasdaq listing. If they get delisted, it will be extremely difficult for them to raise capital and for investors to exit their positions. The market value of their stock is hovering just below the new threshold, and any further drop could be catastrophic. They are essentially betting on a significant turnaround or a surge in their stock price to avoid delisting. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.